definitely market looks very strong to me in terms of both IT as an index, as well as if you see the performance for last 3 days, both Nifty as well as Bank Nifty, I feel the worst is already over and market will definitely do good. Today with whatever SGX is indicating an open of 50-60 point gap up, we should cross the 26,200 on Nifty, which is very positive. And then eventually it's a matter of a day or two. I won't be surprised within this calendar year, we should cross even that all-time high, and 26,300, 350 is just an 100 point away move, and we have to see it very soon. So you have to be very stock specific in this market. And when it comes to sectors, yes, IT definitely looks strong to me right now, and followed by that, look at even metals for that matter looks very strong. OMCs looks good to me. Select auto stocks look good to me. And even if you see both railways as well as defense as a sector has started performing already, keeping in mind the budget, which is also another big event round the corner. So for me, the expectation in terms of how the result season will be and the budget will also play a very, very important role for the next big move in market. So Nifty, yes, 25,700 to 26,350 has been the broad range within which markets are consolidating, and you have to be very sector specific and stock specific in this market. And yes, metals I like a lot, followed by OMCs as a basket looks very strong to me. And then yes, railways, defense, and even IT, these are all themes which you can definitely play. So when it comes to IT, two stocks which I really like at current levels. One is Oracle Financials, very, very strong chart pattern, and already the move towards that consolidation is over, and then the all-time highs can come. And I won't be surprised to see this stock go to 9,000 levels very soon. And for me, Tech Mahindra also looks very strong from IT. So if I have to pick from IT, Oracle and Tech Mahindra, and for me, Tech Mahindra, once it crosses this level of 1650, 1660, yes, a move towards 1800 is possible. So Tech Mahindra and Oracle will be my top picks when it comes to IT. And I really like metals as a sector. That will be my number one sector to pick at current levels. You can look at stocks like especially aluminium, copper in metals basket, whether it is National Aluminium or for that matter Hindalco. See the chart patterns of these stocks, they are all at all-time highs. So for me, Hindalco, National Aluminium, or even for that matter Hind Zinc, Hind Copper, and even JSW Steel. So these are all some of the stocks in metals which I really like. They can all do very, very good and be very positive and bullish in this market. Slowly, broader market will also start participating. It's a matter of time. And I remain bullish in this market till 25,700 holds. Every dip is a buying opportunity.
Okay, every dip is a buying opportunity, and we're obviously at 26,170, and I wonder what the gift Nifty will likely be indicating today. Likely a positive start given the kind of cues that we're getting. We'll pull that one up. There you go. 50 points up is what the gift Nifty is currently indicating. But let's go across to Rabinder. Stocks in news. Rabinder, what do you have on your list?
Well, as cement stocks like ACC, Ambuja and Orient Cement can be in focus, where ACC and Orient Cement will be amalgamated with Ambuja, and Ambuja will issue shares to public shareholders and cancel shares it already holds. And for this, swap ratio will be 382 Ambuja shares for every 100 ACC shares and 33 Ambuja shares for every 100 Orient Cement shares. So back of this, all three stocks can be in focus. Moving to next, Prestige Estate can be in focus, where a company has acquired 25-acre land parcel in Chennai with approximately top line value of rupees 5,000 crore. And apart from this, company has also acquired Ramco Cement non-core asset worth rupees 515 crore. HFCL can be in focus, where company has opened a QIP to raise fund from the institutional investor, fixing a floor price of rupees 65.84 per share with the financial issue price to be decided based on the demand. And Lloyd Enterprise can be in focus in today's session, where company has announced a restructuring to demerge its real estate business into separate listed entity with as a name Lloyd Realty, and unlocking value from a large Mumbai and MMR region bank with the more than 7,000 crore revenue potential. On the back of order win, GPT Infra can be in focus, where company has declared a L1 bidder for order worth rupees 670 crore from the National Highway Authority of India for construction of 4-lane elevated road in Jodhpur. And lastly, Satwik Green Energy can be in focus, where company's arm Satwik Solar has has got order of rupees 486 crore for supply of solar PV modules. So back of this, Satwik Green Energy can be in focus.
Rudra, how do you look at some of the defense stocks? Because we have one of the large defense funds now opening up for subscriptions again. Do you see much some activity coming back in defense, and which are the key picks for you in the defense pack?
Sajid, definitely for me, defense as a sector looks good, keeping in mind the budget which is round the corner. Yes, if you see moves in especially BEL, charts has been very, very strong. So if you see the chart structure on BEL, very strong support for this stock lies at around 385, and now it has broken the immediate resistance which was there at around 395. And last 2 days price action, if you see, it has been supported by volumes. So I will be a buyer in BEL at current market price. Having seen a breakout above 395, yes, this stock is headed towards its all-time high levels, which is at around 430. So at current price action, it is very, very strong, and it is very good risk reward to buy at current market price. So BEL is a buy. Look at targets of 430, have a stop loss of 390. And even for me, HAL, which had been in a downtrend, is now showing some signs of consolidation. Yes, HAL is another stock at around 4,200. There is a strong support. And now for last 3 days, the price action has been very positive. So buy HAL, look at targets of around 4,550 to come on HAL initially. And after it crosses that 4,550 hurdle, yes, a further move on the upside towards 4,800, 850 can be seen. So I am bullish on defense as a pack, and my top two picks will be BEL followed by HAL.
EL followed by HAL, but what's also coming through is the Defence Acquisition Council will meet on the 26th of December with emergency procurement on the agenda. That signals faster approvals to buy critical weapons and equipment. Srinjoy Chaudhary joins in with more details on this one.
After Operation Sindoor, which was the attack on terror camps in Pakistan and Pak-occupied Kashmir, and this came after the Pahalgam terror attack, India had begun a round of emergency purchases for the armed forces. Now that ended on the 19th of November. Now the Defence Acquisition Council, which is likely to meet on the 26th of December, might reopen that avenue of purchases for the Army, Navy and Air Force. Because after the period of emergency procurement ended on the 19th of November, it was found that many of the purchases were still under negotiation. So if you are still negotiating for weapon systems, which you need, and that period has gone, it is only sensible to allow more time to the ministry and the forces to ensure that they can get the weapons they need. So this process will begin again after a decision is taken by the DSE on the 26th. The DSE, of course, is headed by the Defense Minister, and it includes the CDS and the three chiefs, the Defense Secretary, the DRDO chief, and others. So this is going to be very big for Indian industry, because much of the weapons that are being purchased nowadays are Indian. In fact, recent purchases of weaponry by the Defense Ministry are largely Indian, keeping in mind the Atmanirbharata issue. So this will be a big moment, not just for the armed forces, but the defense weapons manufacturers in India.
Thank you so much for that, Srinjoy. We also have Kanishka standing by with all of the other stocks that you need to keep on your radar. Kanishka, what does your set look like?
Absolutely. So let's start with some of the stocks that have received an order win. First up, there's Antony Waste. Now, this one has received an order of nearly 330 crore rupees from the Thane Municipal Corporation. It's to set up and operate a mixed solid waste processing plant. Now, this will come with an capex of 67 crore rupees. So this is the one that's going to be in focus today. We'll watch out for that. This is basis a subsidiary. Now, Antony Waste's subsidiary has received this contract of about 330 crore rupees. Next up, let's talk about Ola Electric. Now, the company has has released a statement that the proceeds from the promoter's one-time share sale, they were used to repay debt of the company, and the balance has been earmarked for taxes. This will lead to a full release of 3.93% promoter level share pledges. So that's the latest that we are picking up as far as Ola Electric is concerned, and we'll watch out for how the stock reacts to this announcement. Next up, let's talk about IIFL Finance. Now, for this, the company has approved the issuance of NCDs on a private placement basis with a base issue size of 200 crore rupees, expandable up to 700 crore rupees, and a separate perpetual NCD tranche of 100 crore rupees. So we'll wait for this one as well, how the stock reacts to it. Next up, let's talk about Man Industries. Now, the company has confirmed that it did see IT raids, that is income tax department searches that have been concluded at its premises. However, business operations that have continued to remain uninterrupted. That's the word coming from Man Industries, and we'll wait for how the stock reacts to this development. Next up, from the mid-cap IT space, we have Coforge, which is going to the board of which is going to mull fundraising on December 26th. So we'll watch out for how the stock reacts to this as well. And lastly, there is Sangvi Movers. Now, this one's a renewable energy subsidiary that has secured a large EPC contract that's worth for 29 crore rupees from multiple IPPs, and this will be executed between FY26 and FY28. So yes, lots of stocks to focus on. We'll be watching out for how these react to all of these developments.
Thanks, Kanishka, for those update. We have now joining us Amnish Agarwal, Head of Research at PL Capital. Amnish, we are in the fag end of the calendar year. What kind of activity do you see? Do you see the index inching upwards to all-time high before we close the year?
I see the index is not very far off from the all-time highs, and usually the activity around this part of the country is actually on the low side. But having said that, I think the outlook remains reasonably optimistic. Very difficult to say what will happen in the next 1 week. But if you look at, say, in the next year, for sure, we are going to make new highs, and I think we expect good returns to come in next year. Very difficult to take what will happen in the next 1 week.
From an earnings point of view, do you see Q3 to be a much better quarter compared to Q2?
You see, Q2 actually had shown some green shoots as the number of stocks with earnings cut. So that has moved with 50% of the gap of 4-5 quarters. And we had seen maybe not much, maybe you can say percentage and a half kind of increase in the Nifty base. So I think as of now, I think it's a mixed sort of a situation as far as your 3Q is concerned. But having said that, I think definitely things are looking better than what we have seen in the past couple of quarters. So details we will know maybe say in another week or 10 days. But overall, I think the outlook remains optimistic, and there is no reason to see that the growth rate which we have seen in the previous quarter will not be sustained. However, one needs to be watchful as the previous quarter earnings were driven by many of the commodity sectors, including steel, cement, oil, and gas. How the sector will behave in the current quarter, I think that is something to watch out for.
Right, Amnish. Amnish, what about, give us your take with regard to IT and how you see IT play out, because that's a cycle which has made a move. Is it an early move and therefore should one participate, or should one now be cautious and hold back and wait for the numbers to start to play through?
See, IT has been on the sideline for quite some time, buying a few stocks, and the main problem here is that the numbers have not been engaged and market expecting them to be. Now, if you look at the current context, I think we have seen in the last couple of days market showing positive momentum as far as IT is concerned. Because first of all, if you look at the yearly returns, the stocks have not done any gaps. That is one. And there could be some catch-up rally for balancing the markets. The second is that in terms of multiples and all, the stock is not very expensive, but the issue has been that it lacks the triggers. So in the near term, maybe say some catch-up can't be ruled out. But having said that, there has to be much more visibility over the medium term for the sector to actually start performing from the current levels.
Okay, what we'll do is slip into a very short break. On the other side, we'll continue conversation with both Amnish as well as Rudra. Stay with us. Welcome back. And, we have both Rudra as well as Amnish in conversation. But Rudra, a couple of stocks in particular which will be in focus is the entire cement pack, right? As a result of this entire consolidation which has been announced. How do some of these counters look on charts? Anything which is looking attractive to you? And I'd want to throw in an Ultratech as well, because while there is no news around Ultratech, there will surely be some amount of a knock-on effect as a result of the consolidation on pretty much all cement counters. So give us a sense of that.
Harsh, when I see the chart patterns of either ACC or even Ultratech, Ambuja, so all of them are definitely not showing any signs of momentum. In fact, they've all fallen from their higher levels and it is in a clear downward pattern. The trend is clearly down. You see the pattern of falling top, falling bottom. Price action has not been definitely positive. So because of this fundamental news, if I see any rise or any momentum on the upside, I will definitely look at some amount of exit as a trader, and I will switch on to sectors like either metals or, for that matter, defense and railways have just started performing in last 2 days. So I will move into any of these sectors as a momentum trader, but I will definitely avoid cement as a pack, and any bounce in that will be an exit opportunity for a trader.
Amnish, how are you looking at defense as a pack? Because that's also one pack where you've started to see a very strong up move play through. There's also likely positive momentum coming from the Defense Acquisition Council meeting up, placing fresh orders, and order books are already quite large. So the visibility is strong. How do valuations therefore add up?
The defense stocks have seen a correction of 10 to 15% over the last, say, couple of months. And many of these stocks, many of these companies, they continue to have strong order books. And I think given the kind of trend which we are witnessing, I think by the time we end the current year, the order books will be further better for all these companies. As of now, the companies are growing, say, you can somewhere between high single digit to, you can say, mid-teens kind of a growth for many of the larger companies. But I think going by their order books, the growth rate should also accelerate. And on any declines, I think all the frontline defense stocks, whether it is, you can say, BEL, HAL, and even some of the other related to, you can say, shipping and all, I think the entire pack should actually do well over the medium to long term. And on any declines, one should be actually buying into the defense stocks.
And Amnish, what about an Ola Electric in particular? Now the promoter selling overhang has gone away, and auto as a sector has done very well, but Ola really hasn't. Is this something which is looking good value in this market?
It is very difficult for me to give any concrete view, but having said that, the problem here is that while the auto sector has done well because the volumes there have been going up ever since the GST rationalization has happened. In the case of Ola, if you look at the number of vehicles which they're selling, it is significantly lower than what they used to be at the peak, and there is no momentum seen over there. Moreover, on the electric side, electric vehicle side, where they are actually operating, some of the other players like TVS and Bajaj, who are making huge amounts of cash flow in their ICE business. So they are actually now more and more going into there, and they are gaining share over there. So to that extent, I think there is no significant USP which is left in Ola, except the battery business for which one should be looking at that stock. So I think it can be, you can say something like, you can say trading uptake or something like that, but for the company to start really doing well, the overall sales volumes has to pick up, for which I think the visibility doesn't seem to be that great.
Fair point. That's the reading on the entire two-wheeler space. But Anthony Waste, that's bagged a 330 crore rupee municipal solid waste pre-processing contract from Thane Municipal Corporation. My colleague Rabinder is here to tell us how meaningful this could be for the company.
Well, as Antony Waste can be in focus on the back of their order win, where company's subsidiary Antony Lara Inverio Solution has awarded a solid waste processing project by the Thane Municipal Corporation, and the scope of the order will be pre-processing of approximately 600 to 800 TPD of municipal solid waste at Bhiwandi, which is owned by Thane Municipal Corporation. And this order will be on DPOT basis, design, build, operate and transfer basis with 10-year O&M responsibility, and the value of the order is is approximately 330 crore over the concession period, and the capex for this order will be approximately 67 crore, and this will be fully reimbursable by the TMC upon the Thane Municipal Corporation upon achievement of defined construction milestone. And commenting on this order, when management say that this project further strengthens company's relationship with Thane Municipal Authority, reflecting the trust placed in their execution capabilities and operational track record. Remember that last week company has also received order of rupees 1,330 crore from the BMC. So on that day also stock was up more than 15%, and today company has also received order of rupees 330 crore from the Thane Municipal Corporation.
Okay, that's the take coming in on Anthony Waste right now. And that, of course, is going to be a stock which we're likely to see some movement on. But also look out for Ambuja, ACC, Orient Cement, given that ACC and Orient Cement are going to merge into Ambuja now. Amnish, wanted to get your sense in. Positive, you think, for Ambuja shareholders, likely to see a pop on the stock this morning?
See, directionally it is positive because lot of your you see operational synergies they have been trying to drive over the last couple of years, but definitely lot of, you can say, the corporate overheads and other things will get rationalized once all the companies come under one umbrella. But then one will have to look at the swap ratio very clearly, and we believe that in terms of Ambuja ACC, there is not much, you can say, gap over there, and so the swap ratio doesn't work in either the favor of Ambuja or the ACC. For Orient, yes, there is some bit of, you can say, upside which could be there, but in the longer term, as all the entities come under one umbrella, some corporate overhead gets rationalized. I think it is going to be positive for Ambuja in the long term, but the stock will move more because already all these companies are getting consolidated into Ambuja. So I think the stock will move more on the fundamentals rather than purely on the news of this merger.
Amnish, one sector which is seeing good tailwind is the infra space. We're starting to see order wins, chunky ones, that too. A GPT Infra, for example, the 670 odd crore order win for roughly a 1400 crore market cap company has had back-to-back order wins over the last couple of weeks, and large ones. So we're starting to see that translate on ground. How would you play the infra theme, and is it looking attractive enough for you to play?
You see, the infra companies, particularly if you look at past 2 to 3 quarters, your order books have not been growing. For example, whether it was road, whether it was, you can say, some of the other infra projects, the awarding was very, very on the low side. But however, in the last, particularly if you look at, say, a couple of weeks in particular, now the orders are getting rewarded. So which could be a positive because it improves the visibility for all the infra names. So difficult for me to, you can say, tell any particular names over here, but definitely whether it is, you can say, some companies which are related to your hydroelectric, your airports, roads. I think the overall infra pack now, if the momentum of this order inflows, they continues over the next, say, month or two, which I think should, in run up to, you can say, the budget or even run up to March, I think there could be definitely positive movement in some of the infra stocks.
Okay, Amnish, stay
going ahead. The portfolio is inclined towards skincare, cosmetics and fragrances, the purchase of which only scale up as incomes grow. So Motilal Oswal believes this is also a key positive for Nykaa. The premium beauty category is expanding at roughly 13 to 15% CAGR, very strong growth over there. Private labels are structurally improving. The company is also structurally positioned to benefit from the mode that's from offline inefficiency and online commoditization. So that's a positive that Motilal Oswal has also pointed out. Sustained profitability is structurally harder to achieve due to returns, discounting cycles and the competitive intensity that the online fashion space is seeing. But despite that, Motilal Oswal likes the fact that the fashion segment of Nykaa that has struggled with profitability is expected to become completely profitable by FY27. There have also been some quarters where the segment has done well and has been profitable, but it is still not completely profitable on the bottom line basis. So this is expected to happen by FY27. The only downside risk that Motilal Oswal is pointing out is slower assortment refreshment coming in the categories they offer, discretionary demand slowdown and intense competition in the space. But other than that, Motilal Oswal is liking Nykaa. It's bullish on Nykaa at the moment. Initiated coverage with a neutral rating with a target price of 280 rupees per share.
Thank you so much for that, Snehi. Some of these platform companies could well be in focus as well. They may continue doing fairly well for themselves. They've had a decent run. You've seen a bit of a pullback. Rudra, on charts, how do they look?
For me, Harsh, definitely two stocks to only pick from this platform kind of a sector, new age. If you want to bet on these themes, for me, Nykaa and Paytm, these are two stocks which look very strong on chart. But if you see other ones like either Eternal, Delivery, they've all come down. And might be one of the strong reason for that is their last quarter results. If you see both Eternal and Delivery, their last quarter results were way below expectation, and also you saw good profit booking in both the counters. So if you want to bet on this theme, my first preference will be Paytm. 1250 has been a strong support for the stock. Every dip from current market price to levels closer to that 1250, I will be a buyer. I won't be surprised to see Paytm move towards 1800, 2000 in a span of next 1 to 2 years. Even at current market price, risk reward is very, very favorable. One can definitely buy Paytm at current market price and on dips to 1250. Keep a stop loss of 1200. Look at targets of 1800, 2000 to come on Paytm. And if you have to pick a second stock from the same sector, yes, Nykaa looks very strong to me. 240 has been the very strong support zone. So at current market price and on dips to 240 by Nykaa, keep a stop loss of 235 and look at targets of 280 and 300 to come on Nykaa. So only two stocks, you have to be very choosy in this sector, and the two names which I will buy will be first Paytm and then Nykaa.
Interesting. Okay. Let me also welcome on board Amar Singh Deo and find out what he's making of the markets right now. Amar, hi. Morning. Great to have you in the show. Guess the story is all about IT. While the ADR for Infosys overnight ended 5% lower and I guess adjusted to the normalcy. But that said, what trend are you foreseeing for IT, Amar, and whether there's still trading opportunities even after the consistent breakouts that one is seeing across the board in IT?
A very good morning, and thank you for having me on the show. So, see, IT definitely, if you look at the IT stocks, they were beaten down, and then we witnessed some sort of consolidation and a pullback in most of the IT stocks. So, if you look at the IT stocks, Infosys, as you rightly said, is stronger on the charts because first I'll talk about Infosys. Infosys had been consolidating, and it was in a range between 1400, 1600. It was unable to break that level. Technically also, it was forming a base. Fundamentally also, there are positive factors, and the depreciation of the rupee is also there, and expectations of more business opportunities going forward. But it's going to be very important that not all IT sectors are going to do well. Those who can capitalize on the newer trends and can convince their customers, they would be better placed. So if I look at some of the IT stocks, Persistent Systems is one stock which is definitely very, very strong technically as well. From a longer term perspective, it is trading close to its record high. So this is one stock one should definitely keep in one's radar. And any pullback is a buying opportunity. This quarter itself, the stock is up almost 35-36%. So that clearly says that despite market corrections, despite the overall IT sector seeing some sort of correction, this stock has pulled back far faster. So this is one stock one can definitely keep a close watch on. Second is from the large caps, TCS is one stock one can keep a close watch on because it did correct significantly, because such sort of correction we don't generally see from almost 4,500 to 3,000 levels. It's up by 10%, but there is a further opportunity that's sustaining about 3,300 levels. TCS could rally towards 3,550, 3,600 levels. So this is one stock one can also look at from the IT space.
Interesting. Okay, looking at some of the other newsmakers today, well, of course, first off, you're going to set your eyes on Ambuja. But that said, Prestige Estates as well, they're buying a 25-acre Chennai land and acquiring Ramco Cement's non-core assets also for about almost 550 crore rupees. Amnish, the performance for realty in the year gone by has been a little bit patchy, especially in the second half of the year. Now, as we step into the new year, you think realty will come back to the fore in terms of market performance? And any favorite ideas there?
You see, the reality stocks, as we discussed in the past, they have been very, very range bound. And the reason for that is that the kind of uptick we have seen in these stocks in the last couple of years, that has been pretty significant. Now from here on, if you look at all the major markets where these relative players are, you can say operating, the kind of growth we have already seen now, I think the growth has actually peaked out. It is not that you are in some sort of a decline stage, but the growth has peaked out. And from here on to continue delivering these kind of numbers is not going to be easy. So I think the relative stocks, they will remain, you can say, sideways to range bound for quite some time and amidst some sort of consolidation, because I think in certain markets, the inventory with some of these real estate players is also rising. Although the tailwinds should be there from the lower interest rate, but having said that, I think in the near to medium term, I don't see major performance to come from the relative players.
Okay. Amnish, platform companies at all, you're liking any of them at this point?
You see, the platform companies actually they're a story of the sheer gain from whether you call it brick or mortar, whether you call it from modern trade, and that is why given the fact that the mobile density in India is increasing and the people are moving towards that, so that is giving them solid sales growth. But having said that, not many companies are having enough profitability or margins at this point of time. Now, if you look at the frontline companies, I think your Eternal is one stock which looks interesting. It has corrected from 340, 350 levels to the current levels of 280, 85. I think the balance sheet remains strong, although one should not expect any fireworks in terms of growth to pan out in the near to medium term. But Eternal is one stock which looks good to us at this point of time.
Interesting. Okay, that's the play coming in on the entire platform companies. The GIFT Nifty, that's indicating a mildly positive start for us. Let's just revisit that as we step closer to the pre-open rates. And currently mildly up in the green at the 26,259 level. But Amar, what's the likelihood of us making a dash perhaps at a record high once again before we close in on the year?
I would say the probability definitely is higher. The way the markets have been holding up firm, and there's not much of a, I would say, negative news also. And the way we've seen the Nifty really holding, it clearly shows that there is a lot of interest which is there, and lower levels definitely is being bought into. And if you look at the structure of the index, clearly that points towards sustained gains. But yes, 26,200, 26,300 level, that should act as a zone of resistance, immediate resistance. Once we breach that level and sustain over the 26,300 levels, then yes, we are definitely headed for higher levels, and it could be record levels as well. Whether it's going to be in this year itself, because we've got few trading sessions we'll have to watch out for, but that really materially doesn't much matter. There's one stock I would definitely like to talk about when you had talked about the IT space, and that is Birla Soft. So this is one stock one can definitely look at. It's formed a strong base around 450 levels. So buying at the current levels with a stop loss of 427 and a target of 487.
Okay. All right. Amnish, if I can come to you, this large GLP-1 opportunity which is likely to open up, are you playing that in any fashion, and anything within pharma, chemicals, that basket which is looking attractive at this point?
You see, in case of pharma, we have been structurally more positive on, you can say, some of the names like your Sun is there, Lupin is there, and not specific with this opportunity.
Interesting. Amnish, great to have you on the show. We'll let you go on that note. Good to speak with you as always. Well, guess what? Another record high for silver. Consistent outperformer. And I think if we just take a cumulative or net move of how 2025 has been amongst all asset classes, I'm sure silver is going to win. That, of course, is the Nifty, the pre-open rates, much milder, but the fact that we've made it to that 26,200 print, which we in any case were closing in on the futures yesterday itself. But Amar, any mid-cap strategies you may have for our viewers?
Yeah, I would say one stock to look at from the pharma space, and that is Granules India. So what we are seeing here is that the stock has formed a very strong base. It has and it formed a double bottom around the 450 odd levels, and it has bounced back significantly. Currently, it's around the 600 level. If you look at it from a medium term, intermediate term perspective, and a longer term perspective, the structure of the stock is quite strong. Yesterday was a very strong day, and also what we've seen is that the volumes have been significant on decline days. And there was a lot of buying which had come at lower levels. So that clearly shows that this is one stock one can look at. Currently, it's around the 600 mark. So this is one stock one can look at with an upside target of 657 and a stop loss of 567.
Rudra, what about your mid-cap ideas?
See, for me, Asha Purana Mindchem looks very, very strong on chart. Even yesterday's price move with volume action signals to me that still the rally is further ahead, and you can see 4-digit levels on Asha Purana Mindchem. So I'm looking at target of 1000 with a stop loss of 800 to come.
Right, okay, that's Ashapura Mindchem, 0.5% higher in trade as we speak. But let's tell you what else is happening in the world. In China,